Happy Friday, Eric Bible with the Bible team at Neil Home Loans. I hope you all had a very happy and safe 4th of July. And it almost feels criminal that we're here working today. But nonetheless, hey, we're going to make the best of it as it's Friday. And like us, the BLS, Bureau of Labor and Statistics, is working today. And they released their all important jobs report for the month of June. More to come on that. And there's some interesting things that were uncovered in this new report. With that said, this morning we start off with the 30-year fixed at 7.08%, which is up, yes, from last week's 7.05, a slight increase. And I believe it's really tied to the fact that we're looking and working with a shortened week. But despite it being a short week, a ton of information received, data. So let's dive in. So first and foremost, manufacturing data. Now, manufacturing data historically has not been, a wildly revered report that was market moving. It was really kind of a leading indicator of the performance of the economy, as ISM, which stands for Institute for Supply Management, really is at the producer's level, manufacturing level, as this is, kind of the beginning of the supply chain. And as I mentioned earlier, it is not a piece of data or a report that historically, merited much attention or kind of riled the markets for that matter. But given the current environment, inflation being where it is, with the cost to produce being so high, really anything in relation to what the consumer will pay for the end product is definitely garnering attention. And this week, it showed some additional signs of weakening. Markets were anticipating a 49.1% increase from the previous month. This morning, or this week, 48.5, which is a leading indicator that the producer or manufacturer, for that matter, is starting to slow down. So with that, this kind of really sparked and pulled mortgage rates down from their week's highs. I would call it kind of the start of the rally this week. So here it's definitely something that we're watching. Again, it's not an earth-shattering report, but it is noteworthy given the fact that it did create some volatility, which in turn was beneficial to mortgage rates on our end. But the all-important one this week was Bureau of Labor and Statistics. And there was a ton of anxiety walking into this report, as there is with every jobs report. And it wasn't just around the numbers, it was around the fact that we're looking at a shortened week. And what that typically means for markets like you and I, like our employees, our borrowers, our clients, this time of year, 4th of July, is, typically centered around family, away from work, not working, which is true within the financial markets. Usually there's less trading behavior, which ultimately leads to more volatility and rates not moving in a normal kind of trajectory. So that said, leading into this report, a ton of anxiety coming on a Friday, the day after the 4th of July. But with that, it was definitely a surprise. So first things first, the number of new jobs created was a miss. Markets were anticipating 190,000 new jobs. We got 206,000. So it showed more new jobs created in the month of June than forecasters expected. But the big surprise came in the form of unemployment. Markets were gearing up and anticipating unemployment remaining at that 4% mark. By surprise, it moved up to 4.1. That has opened up a rally this morning. Yes, it's still too early to really understand what implications that will have on the rate sheet. But given the fact that it is yet again a shortened trading day, less traders really at their trading desks, markets are liking it. And again, why this is so important is the Fed has been very vocal. We want price stability, inflation to come down, and maximum employment. Given the fact that we now just hit really a 3-year high on unemployment, it's starting to ignite the question and inquiries of, well, how does the Fed respond to this? Will the Fed cut rates? I don't know. It's still too early. Our crystal balls, as I've said before, are definitely broken. But a surprising move in unemployment is definitely kind of piquing the curiosity of forecasters, pundits around what the Fed will do next. Next week, we get the all important inflation data. All these reports are all important, but CPI next week. So, definitely something that we'll be monitoring very closely, as we know that the Fed meets at the end of July. So, it'll be interesting to see what stance they take, given the fact that we've now seen inflation come down further, and now unemployment starting to move higher. So definitely some interesting things to keep eyes on. But for now, hey, we're going to run with it. Yes, it is a shortened week. It's Friday leading into what we're all calling a holiday weekend. So with that, wishing you all, as usual, a fantastic Friday and an even greater weekend. Make it a great day.